How inflation works. Imagine finding a $100 bill hidden inside an old drawer. You'd probably be excited. After all, it's still $100. But what if I told you that the same $100 could buy far less today than it could 20 years ago? The bill didn't change. The number didn't change. So what happened? The answer is inflation, a force so powerful that it affects almost every person on Earth. Every time you buy groceries, pay rent, fill your car with gas, or simply try to save money, inflation is quietly working in the background, and most people don't fully understand how it works. So let's fix that. What is inflation? At its simplest, inflation is the increase in the prices of goods and services over time. When inflation happens, things become more expensive. A burger that cost $1 years ago might cost $5 today. A house that cost $50,000 decades ago might cost hundreds of thousands today. A movie ticket that once cost a few dollars might now cost several times more. The important thing to understand is this. Inflation doesn't necessarily mean things become more valuable. It often means your money becomes less valuable. Think of money as a ticket. If the number of tickets increases faster than the number of available goods, each ticket becomes less powerful. And that's exactly what inflation does. A simple example. Imagine there is an island with only 100 apples. There are also exactly $100 in circulation. That means each apple is worth about $1. Now imagine the government suddenly prints another $100. Nothing else changes. There are still only 100 apples, but now there are $200 chasing the same 100 apples. What happens? Prices rise. Instead of costing $1, each apple might now cost $2. And the apples didn't change. The money changed. This is one of the easiest ways to understand inflation. When more money chases the same amount of goods, prices tend to rise. Why does inflation happen? There are many reasons. One of the biggest is an increase in the money supply. When central banks create more money and that money enters the economy, spending often increases. Businesses sell more products, consumers buy more goods, demand rises, and when demand rises faster than supply, prices usually follow. But that's not the only reason. Inflation can also happen when production becomes more expensive. Imagine oil prices suddenly increase. Transportation becomes more expensive. Factories spend more money, stores spend more money. Eventually, those higher costs get passed on to consumers. In other words, businesses charge more because producing goods costs more. This is often called cost-push inflation. Why inflation feels worse than it sounds. A 2% or 3% inflation rate doesn't sound scary, but inflation compounds. Just like interest, a small increase every year eventually becomes a massive increase over decades. That's why older generations often talk about things being much cheaper in the past. They're not imagining it. Their money simply had more purchasing power. $1 decades ago could buy significantly more than $1 today. The hidden tax, some economists call inflation a hidden tax, not because the government literally takes money from your wallet, but because inflation reduces what your money can buy. Imagine you save $10,000 in cash. If inflation averages 5% per year, that money loses purchasing power over time. The number in your account stays the same, but its ability to buy goods slowly shrinks. That's why many investors worry about inflation. They're not just trying to grow money, they're trying to stay ahead of inflation. Is inflation always bad? Surprisingly, no. A small amount of inflation is considered normal in most economies. Why? Because it encourages spending and investing. If prices never increased, people might delay purchases forever. Businesses might invest less. Economic growth could slow down. Most central banks actually aim for a modest inflation rate rather than zero inflation. The problem begins when inflation rises too quickly. When prices increase much faster than wages, people struggle. Their paychecks buy less, savings lose value, and everyday life becomes more expensive. Inflation is one of the most important financial forces in the world. It affects your groceries, your rent, your salary, your savings, and your future. The next time you hear someone say that everything is getting more expensive, remember, inflation isn't really about things becoming more valuable. It's often about money becoming less powerful. And understanding that simple idea is the first step toward understanding how the modern economy works.